Once upon a time, there was a young lad named Warren. Warren wasn't your typical kid. While others were playing with toys, he was busy thinking about money and how it worked. At the ripe age of 11, Warren took his first dive into the world of investing. Now, you might think 11 is a bit young to be dabbling in stocks, and you'd be right. But Warren was different. He wasn't just throwing darts at a board or picking stocks based on their names. No, Warren was on a mission. He wanted to understand the ins and outs of the stock market, to unravel its mysteries and secrets. So, armed with his curiosity and a thirst for knowledge, Warren began his journey. He experimented with different strategies, tested out various techniques, and even though he wasn't making any profits at first, he didn't mind. Because for Warren, it wasn't just about the money. It was about the thrill of the chase, the excitement of learning something new. For years, Warren immersed himself in the world of investing. He pored over stock charts, devoured every book he could find on the subject, and soaked up knowledge like a sponge. But despite his efforts, he still felt like something was missing. He was searching for more than just tips and tricks. He wanted a framework, a solid foundation upon which to build his investing knowledge. And that's when it happened. Warren stumbled upon the key to unlocking his potential as an investor: mastering stock market investing strategies for beginners. With this newfound insight, Warren's journey took on a new direction. He learned how to time the market, how to analyze stocks effectively, and most importantly, he discovered the importance of having a clear, defined strategy. And as Warren's knowledge grew, so did his success. He went from a curious kid with a dream to one of the most successful investors of all time. And it all started with a simple desire to understand how money works. So if you're just starting out on your own investing journey, take a page from Warren's book. Dive in head first, experiment, learn, and never stop seeking knowledge. If you want to learn more about investing, don't forget to subscribe on our channel. Back in 1949, Warren Buffett stumbled upon a book that would change the course of his life forever: The Intelligent Investor, by a man named Ben Graham. Now, Warren had never heard of Ben Graham before, but this book, it was like a revelation. In just 2 chapters, Graham laid out some fundamental principles that would become the cornerstone of Warren's investing philosophy. First off, he taught Warren that a stock wasn't just some random ticker symbol flashing on a screen. No, it was much more than that. A stock represented a piece of a real business, with its own unique characteristics, competition, and management. Warren realized that to truly understand a stock, he needed to think of it as a business, not just a bunch of numbers on a chart. Then, Graham introduced Warren to the concept of Mr. Market. Now, Mr. Market was a quirky fellow who showed up every day, offering to buy or sell stocks at various prices. Sometimes he was overly optimistic, and other times he was downright pessimistic. But here's the thing Warren learned. He didn't have to listen to Mr. Market's every whim. No, Warren could capitalize on Mr. Market's mood swings by purchasing undervalued stocks and disregarding all the noise in between. Lastly, Graham hammered home the importance of having a margin of safety. Now think of it like this: you wouldn't drive a truck over a bridge that was barely holding up, would you? Of course not. Well, Warren learned that he shouldn't invest in stocks unless there was a significant margin of safety. In other words, he needed to buy stocks when they were selling for less than their true value. And with these lessons in hand, Warren Buffett set out on his journey to become one of the greatest investors of all time. Armed with these 3 simple yet powerful principles, Warren set out to conquer the stock market. He focused on finding businesses with enduring competitive advantages, run by honest and capable management teams. Instead of trying to predict every move of the market, he patiently waited for opportunities to buy great businesses at bargain prices. So, what's the moral of Warren's story? Here are 5 key lessons that young or beginner investors can learn from Warren Buffett's journey. Lesson number 1: start early and stay curious. Warren began his investing journey at a young age, showing that it's never too early to start learning about money and investing. Young investors should embrace their curiosity and start exploring the world of finance as soon as they can. Even if they don't have much money to invest initially, the knowledge they gain from early exploration can be invaluable later on. Warren's early start highlights the power of compounding returns over time, making it crucial for young investors to begin their journey as soon as possible and maintain a curious mindset to continuously learn and grow. Lesson number 2: focus on long-term value. Instead of trying to make quick profits by timing the market or chasing hot stocks, Warren emphasizes the importance of focusing on long-term value. Beginner investors should learn to think like business owners, seeking out companies with strong fundamentals and enduring competitive advantages. By investing in businesses they believe in for the long haul, they can potentially reap the rewards of compounding growth over time. Prioritizing businesses with strong fundamentals and enduring competitive advantages can help beginner investors build a portfolio of investments that stand the test of time, generating wealth steadily over the years. Lesson number 3. Ignore market noise. Warren's concept of Mr. Market teaches investors to tune out the stock market's daily fluctuations and focus on the underlying value of their investments. Beginner investors should steer clear of market hype or panic, keeping in mind that short-term emotions, not long-term fundamentals, often drive market volatility. They can avoid making impulsive decisions based on market noise by staying disciplined and patient. Beginner investors should cultivate the discipline to ignore short-term market fluctuations and focus instead on the underlying value of their investments, understanding that the stock market's daily gyrations often have little bearing on the long-term success of quality investments. Embrace the margin of safety. One of Warren Buffett's key principles is the importance of having a margin of safety when investing. Beginner investors should learn to assess the intrinsic value of a stock and only invest when the market price is significantly below that value. This margin of safety provides a buffer against potential losses and increases the likelihood of achieving favorable returns over time. Understanding the concept of margin of safety not only protects investors from downside risk but also instills the confidence to stay patient and disciplined, knowing that they are investing with a buffer against unforeseen challenges. Continuous learning and adaptation. Throughout his career, Warren Buffett has emphasized the importance of continuous learning and adaptation. Beginner investors should approach investing as a lifelong journey, committing to ongoing education and self-improvement. By staying informed, remaining open to new ideas, and learning from both successes and failures, they can continue to refine their investing strategies and achieve long-term success in the stock market. Just as Warren Buffett has evolved his investing approach over the years, beginner investors should commit to lifelong learning and adaptation, staying flexible and open-minded in the face of changing market conditions and new investment opportunities. Thank you for embarking on this enlightening journey through the principles of investing with us. We trust that Warren Buffett's timeless wisdom has provided you with valuable insights and actionable strategies to navigate the complex waters of the stock market. Remember, successful investing is not just about picking the right stocks. It's about cultivating a disciplined mindset, focusing on long-term value, and embracing the power of compounding returns. If you enjoyed today's episode, be sure to like, share, and subscribe to Money Ocean for more insightful content on finance, entrepreneurship, and personal development. Join our community of like-minded individuals committed to achieving financial freedom and unlocking their full potential. Until next time, may your investments be prosperous, your dreams be bold, and your journey towards financial success be filled with abundance and fulfillment. Happy investing, and may the tides of fortune forever be in your favor.